Hello everybody, this is Lara from Pure Elliott Wave with an update for US dollar index analysis for you. It's been a long time since we've updated this. Jack and Jordan were the last to do this and now I'll have a go. The bigger picture I expect in Elliott Wave terms is a huge triangle, and I think this triangle, I haven't put those labels in the chart, but I think the triangle is wave Y at supercycle degree of a combination. So the triangle begins here and we have A complete, B complete, now we need C, D and E. So overall I'm expecting sideways movement for several years, or if not decades, to complete this triangle. Within an Elliott Wave triangle, all of the subwaves must subdivide as zigzag or zigzag multiples, with only one allowed to be a zigzag multiple. And here, cycle wave B fits best as a double zigzag, a zigzag multiple, W, X, Y. If this is correct, then B should be complete here, and we should be seeing overall downward movement for C to subdivide as a zigzag. C may not move beyond the end of A for a contracting or barrier triangle below 70.69. I'm going to use the 95% confidence interval for the length of wave C to wave B within all triangle types based on my research, which is 0.764 to 0.804. So 0.764 to 0.804, the length of wave B, deducted that from the starting point for C gives us a target from 81 to 79. So that's where I'll expect overall downward movement to end, probably in a couple of years or so. Let's have a look at how B has ended and how C has begun at the weekly time frame. This high here is this high here. C must subdivide as a single zigzag structure because only one triangle subwave may subdivide as a multiple, and that may have been taken by wave B. So all of the remaining triangle subwaves may only be single zigzags. Wave A could be complete. Wave B has extended higher following last analysis. So I had expected it was over here, but now I've moved the degree of labelling in this flat down 1 degree and seen primary wave B continuing further. This is the only way to label primary wave B. It can't be an expanding triangle, A, B, C, D, E, because D doesn't move beyond the end of where B would be. But this low is slightly above this low. It's not a truncation because intermediate B has moved beyond the end of A. It's a 110% correction of A, so this is an expanded flat for primary wave B. The subdivisions all fit very well. Risk and the invalidation point for this wave count is up here. Primary B, if it continues further within a zigzag, B may not move beyond the start of A above 114.78. And I'll just add that target range down here. It's the same for all time frames, 81 to 79 for further downward movement in a 5-wave structure for primary wave C. So let's take a look at the daily time frame now. This high here is this high here. Primary wave C must subdivide as a 5-wave motive structure. That'll be labelled intermediate 1, 2, 3, 4, 5, and 2 may not move beyond the start of 1 above 110.18. For the shorter term at the daily time frame, this is where risk lies and this is where potential reward lies for your calculations. This wave count absolutely cannot have a new high above 110.18. For the short term, it would be invalidated. And then I would have to expect that primary wave B is continuing higher. At this stage though, that looks unlikely. Let's draw a channel around intermediate C. We can use that. Let's try Elliott's first technique from 1 to 3. This isn't going to work. And a copy on 2, no, 4 doesn't fit. So second technique from 2 to 4, that does fit, copy on 3. So this channel contains most of intermediate wave C. The channel is breached, backtest of resistance, moving down and away. I'd look for resistance of this trend line. So if you have a higher appetite for risk, you could risk off this trend line. While price remains below this channel and below this invalidation point, this will be my main wave count. If the invalidation point is breached, then I'll consider primary wave B continuing higher as a double flat or double combination. I have a little bit of a throat infection and it hurts a little bit to talk, so I'm not going to go over alternates. I do have alternates, but I just can't talk for too long, so let's move into technicals. Technicals at the monthly. Do we see any divergence? Do we see any weakness at this high? Unfortunately, this data that I've got from bar chart does not have volume data for the US dollar index. So the technical analysis is limited because I use volume a lot in my technical analysis. I can't do it here. Look for resistance at 115, look for strong support below at 100. If we break below support at 100, I'd have a lot of confidence for the short to mid-term in that Elliott Wave count. This was a waning trend. ADX indicated an extreme but not very extreme trend back in 2016, and from that point to the end of 2022, ADX reaches a lower point, so the trend is waning. So that offers a little bit of support to the Elliott Wave count. There's bearish divergence between price and RSI after RSI reached deeply overbought the divergence between September 2022 and March 2015. Now, I'm a little bit skeptical about this because these pivots are so far apart. I find it much more reliable if your pivots are closer together. But it's fairly strong divergence. The difference between price is quite substantial. The difference between RSI is reasonable. ATR has been declining since the last high. Doesn't really give us much information either way. The start of a C wave in a triangle could certainly start off with weakness. I'd expect to see an increase in ATR once we move into the third wave. Technicals at the weekly. Look for resistance at 1110, look for support at 106, below that at 100, much stronger. But for the shorter term, support at 106. While price remains below resistance at 1110, the Elliott Wave count will be favoured. ADX is today declining, indicating no clear trend, but it won't take much to turn the black ADX at the weekly time frame up and again indicate an upward trend. There's been no crossover of the DX line, so there still could be an upward trend in place. There's no bearish divergence here between price and RSI. There is if you go all the way back here, but I just think those two pivots are too far apart. So no divergence to support the Elliott Wave count at the weekly time frame. Technicals on the daily, we can see double bearish divergence at the daily. Look for resistance at 1110, support at 106. ADX tells us at the daily time frame the upward trend reached very, very extreme. So that does support the Elliott Wave count, and it was waning at the last high. Here's that double bearish divergence between price and RSI after RSI reached overbought. RSI is now below 50. As price moved down off the high, we did initially see some increase in ATR, so there is a little bit of strength in the early part of this downward movement. That also offers a little bit of support to the Elliott Wave count. That's it. That's all I can manage today. Thank you for watching, and if you're not already subscribed, I recommend you do so because we're giving you 2 or 3 videos a week for free. I've got 11, I think it's 11 or is it 12? 11 or 12 years experience now as a CMT, and I've been using Elliott Wave for 17 years. So you're going to get my expertise and qualifications on this channel for free. I've also trained Jack Frost. He's been training with me for over 2 years now, and I think he's doing a fantastic job. He's more concise than I am. His analysis is always supported by my work as well. That's it for me today. I hope you're all having a lovely day.